What if I told you the government might not actually take as much of your paycheck as you think? And what if I told you that misunderstanding how tax brackets work could cost you money and a whole lot of unnecessary stress? Stick around, because by the end of this video, you'll finally understand how tax brackets really work, and you'll see how most people get it completely wrong. Number 1. Why people think tax brackets are scary. Let me guess. When you hear tax brackets, your palms sweat a little. You imagine hitting a higher bracket and suddenly handing over half your paycheck, right? That's a super common myth. People think if they move into a higher tax bracket, all of their income gets taxed at that higher rate. And that's just not true. Here's an example. Let's say you earn $50,000 in a year and the next tax bracket starts at $45,000. A lot of people believe crossing $45,000 means all of your income is now taxed at that higher rate. Nope. Only the portion above $45,000 gets taxed higher. The rest stays at the lower rates. Think of it like climbing stairs. You only pay the higher toll on the higher steps, not on the whole staircase. Number 2. What are tax brackets, really? Okay, let's clear the air. In the USA, we have something called a progressive tax system. That's just a fancy way of saying the more you earn, the higher the rate you pay, but only on the extra money in each bracket. Imagine your income is divided into chunks, and each chunk fits into a separate bucket. Each bucket has its own tax rate. The first bucket might get taxed at 10%, the next bucket at 12%, the next at 22%, and so on. For example, in 2025, the first $11,000 of income for a single filer gets taxed at 10%. The next chunk, up to around $44,000, is taxed at 12%, and only the money above that moves to the next higher rate. So if you earn $50,000, you're not paying 22% on all $50,000. You're paying a mix of 10%, 12%, and just a little at 22%. It's like buying fruit at different prices per pound, depending on how much you grab. The first pounds are cheaper, the later pounds cost more, but only those extra pounds. Number 3. Why higher brackets don't mean you lose money. This one trips up even smart people. Sometimes folks say, if I get a raise, I'll actually take home less because it pushes me into a higher tax bracket. Wrong. Why? Because again, only the extra dollars above the threshold are taxed higher. A raise means you still keep more money overall. Here's an example. Say you earn $44,000 and you get a raise to $46,000. Those two extra $1,000 fall into the next bracket, but your first $44,000 stays taxed at the lower rates. So yes, you pay a little more tax on those extra $2,000, but you still take home more money than before. You're never worse off. Number 4. A story from my friend Mike. Mike once told me he refused a promotion because it wasn't worth it since it bumped him into a higher bracket. So I sat him down and walked him through his numbers. Turns out, his raise was going to give him $5,000 more a year. And even after paying the higher taxes on the portion above the bracket, he was still ahead by over $3,500. He almost left thousands on the table because he misunderstood tax brackets. Don't be like Mike. Number 5. How to read the tax table without falling asleep. Here's how you can actually read a tax table and make sense of it. First, look up your filing status. Are you single? Married? Filing jointly? Head of household? Each one has its own set of brackets. Then, see which ranges your income falls into. For example, if you're single and earn $35,000, you'll see first $11,000, 10%, next $24,000, 12%. That's it. You never even reach the next bracket. Add those up, and that's your total tax. If you're married filing jointly, the brackets are wider, meaning you can earn more before hitting the next rate. It's easier than it looks once you break it down like this. Number 6. Marginal tax rate versus effective tax rate. Don't mix them up. Here's a little term that confuses people. Marginal tax rate. Your marginal rate is the rate on your last dollar earned. Your effective tax rate, though, is the average rate you actually pay across all your income. For example, if you earn $50,000, your marginal rate might be 22%. But your effective tax rate could be much lower, like 12 or 13%, because your first dollars were taxed at the lower rates. That's why your tax bill is never as scary as your marginal bracket makes it seem. Think of it like a layered cake. The top layer is taxed higher, but the rest of the cake is still taxed lower. Number 7. How deductions and credits fit into all this. Here's another piece of the puzzle. Deductions and credits. Deductions lower the amount of income that gets taxed. For example, the standard deduction in 2025 for single filers is about $14,000. That means if you earn $50,000, you only get taxed on $36,000 after that deduction. Then there are credits, and credits are even better. Credits actually reduce your tax bill dollar for dollar. For instance, if you owe $3,000 in taxes but qualify for a $1,000 tax credit, you now only owe $2,000. So deductions lower your taxable income. Credits lower your tax bill. Number 8. The staircase metaphor. Why it's so useful? Still confused? Let me tell you one more time using my favorite metaphor. The staircase. Each step of the staircase represents a tax bracket. As you climb, the higher steps have higher rates. But you only pay the higher toll on the steps above, not on all the steps below. So if you climb 2 more steps, you pay more on just those 2. The steps you've already climbed stay taxed at the lower tolls. Once you picture it like a staircase, you realize tax brackets are a lot less scary than they seem. Number 9. Why this matters for your next raise or job change. Understanding tax brackets can actually help you make smarter decisions about your income. For example, if you're negotiating a raise, you don't need to worry that being pushed into a higher bracket will wipe it out. It won't. Or if you're planning overtime or picking up a side gig, you can confidently say yes, because you know you'll still take home more money. When you understand how it really works, you can stop stressing and start planning. Number 10. Common misconceptions. Busted. Let's recap a few myths. Myth 1. Moving to a higher bracket taxes all your income at that higher rate. False. Myth 2. Getting a raise might leave you with less money. False. Myth 3. Higher brackets mean the government takes half your paycheck. False. Knowing the truth helps you keep more of what you earn and keeps you from making fear-based decisions. Number 11. Why your tax bracket can change every year. Your tax bracket isn't set in stone. Each year, the IRS adjusts tax brackets slightly to keep up with inflation. That means even if you earn the same amount next year, you might actually fall into a slightly different bracket and pay a little less or more. For example, if inflation is high, brackets are adjusted upwards, letting you earn a little more before hitting the next rate. It's a small detail, but one that can save you hundreds of dollars over time. Number 12. Why 2 people with the same income can pay different taxes. Here's a fun one. You and your coworker might earn the same salary but owe different taxes. That's because tax owed depends on more than just your gross income. It also depends on your filing status, deductions, credits, and even which state you live in. For example, someone married with 2 kids can claim credits and deductions that a single person cannot, lowering their effective tax rate. This is why it's smart to learn which deductions and credits you qualify for. Number 13. How states play into the equation. Federal tax brackets are only one piece of the pie. Most states also have their own income taxes and their own brackets. Some states, like Florida or Texas, don't have a state income tax at all. Others, like California, have much higher state tax rates. So when you're calculating your take-home pay, don't forget to include your state's rules too. Number 14. Why you should know your effective tax rate. Your effective tax rate tells you how much of your income actually goes to taxes on average. It's a great number to know when you're budgeting, saving, or planning ahead. For example, if you earn $50,000 and your effective tax rate is 13%, you know about $6,500 will go to taxes, not 22% of your entire income, which is a common mistake. Knowing this helps you make smarter choices about spending and saving. Number 15. How withholding affects your bracket. Ever wonder why your refund feels big or small? That's because of how much tax your employer withholds from your paycheck during the year. If too much is withheld, you get a big refund. If too little is withheld, you might owe taxes come April. But here's the thing, withholding doesn't change your tax bracket. It just means you're prepaying your taxes and then settling up at tax time. Number 16. How brackets impact retirement income. Even in retirement, tax brackets still matter. Your Social Security benefits, pension, and withdrawals from retirement accounts are often taxable. So knowing where your income falls helps you plan. Smarter withdrawals to stay in a lower bracket when possible. For example, spreading out withdrawals over several years might keep you in a lower bracket and reduce your overall taxes. Number 17. How brackets work with side hustles. Got a side hustle? Tax brackets still work the same way. If your main job earns $40,000 and your side gig brings in $10,000 more, that extra $10,000 only moves into the next bracket for that portion. You're not suddenly taxed at a higher rate on all $50,000. Understanding this can give you peace of mind and confidence to keep hustling. Number 18. Why fear of brackets can hold you back. Fear of higher brackets can make people turn down raises, overtime, or new opportunities. But now you know, that fear is based on a myth. Every extra dollar you earn still puts more money in your pocket, even if it's taxed at a higher rate. Once you let go of that fear, you can start saying yes to more chances to grow. Now that you've seen how tax brackets really work and why they're not as scary as people say, I want to know, what's the biggest myth about taxes you believed? Before watching this, share your answer in the comments below.